Welcome everyone to Future with Finance. Today's video is all about 8 common things that Warren Buffett has mentioned where poor people often waste their money. By watching this video until the very end, you'll be able to avoid making the same mistakes and make better financial decisions. Let's get started. Number 1. Spending too much on clothes. Bill Gates, one of the world's wealthiest people, is known for his frugal approach to fashion. Despite having access to unlimited resources, he chooses to spend very little on clothing and even wears a Casio watch that costs less than $100. Surprisingly, Gates isn't alone in his minimalistic fashion choices. Other billionaires like Mark Zuckerberg, Warren Buffett, and even the late Steve Jobs have adopted similar approaches. But why do these wealthy individuals not splurge on luxury clothing items? The answer lies in their understanding that money is not limitless and that it requires hard work to earn it. They recognize that some things are simply not worth spending their hard-earned money on. This doesn't mean they can't afford luxuries, but rather that they choose to make smarter purchasing decisions. Mark Zuckerberg, for example, sticks to basic clothing items to simplify his life and eliminate one less decision to make in the morning. This helps him focus on his work and the things that truly matter. Similarly, Bill Gates favors functionality and practicality over fashion, opting for simple button-down shirts and chinos. Warren Buffett taught Gates that one doesn't need much to look good, and that being comfortable in what you wear is essential for productivity. Many billionaires and millionaires remain at the top in part because they live simple, austere lives, starting with their clothing choices. By repeating outfits in new ways and getting more use out of their clothes, they manage to look good while spending less. So the next time you're considering splurging on a new wardrobe, remember that sometimes less is more, and simplicity can be the key to success. Number 2. Buying new cars. David Bach, a successful author and self-made millionaire, once shared his financial wisdom with CNBC and advised against buying brand new cars. Despite the allure of a shiny new ride, Bach believes that nothing in your life will waste more money than purchasing a new car. This is especially true for millennials, who can make the single most disastrous financial decision by buying a new car that immediately begins to depreciate the moment it's driven off a lot. Bach warns that within the first year, a new car can lose up to 30% of its value, and by the 5th year, it can lose up to 60% of its initial worth. To compound this issue, most people borrow money to buy new cars, which is an even bigger financial mistake. Borrowing money to buy an asset that rapidly decreases in value is never a smart decision. However, Bach offers a solution to this problem: purchasing a used car that was previously leased for 2 to 3 years. These cars are often like new and can be bought at a 30% discount, making them a much more affordable option. To help people avoid making costly mistakes when buying a car, Bach recommends using the 1/10 rule. This means spending no more than 10% of your annual gross income on the purchase of an automobile. By following this rule and opting for a used car instead of a new one, you can acquire a comfortable ride without breaking the bank. In conclusion, David Bach's advice is simple yet valuable. By avoiding the temptation of buying a brand new car and following the 1/10 rule, you can save a lot of money in the long run and make smarter financial decisions. Number 3. Spending too much at restaurant. Having fun is an essential part of life, and we all need to indulge in it every now and then. Whether it's going out for drinks with friends or catching a movie with your partner, it's easy to overspend on these activities. Of course, there's nothing wrong with enjoying a night out, but it doesn't have to be a weekly or bi-weekly routine. One of the easiest ways to save money is by cooking at home instead of dining out. Cooking your meals will save you a lot of money, as it's often cheaper to buy ingredients and cook them yourself than it is to order from a restaurant. And not only will you save money, but you'll also make healthier choices and eat more organic foods, fruits, veggies, and whole grains. Plus, you'll likely reduce your medical expenses in the long run. If you have a special event coming up, like an anniversary, it's perfectly okay to splurge on a fancy dinner. But for regular hangouts with friends, try staying in and having a relaxing night at home at least a few times a month. By being mindful of your spending and making smart choices, you can still have fun while saving money. Number 4. Junk food. Many people assume that those who are struggling financially cannot afford to eat nutritious meals. But have you ever stopped to compare the cost of fresh fruits and veggies to that of junk food like chips, ice cream, and cookies? Believe it or not, the latter is actually more expensive in the long run because it doesn't last as long as a head of lettuce or a bag of carrots. Plus, the toll that unhealthy food takes on your body is simply not worth the cost. Contrary to popular belief, wealthy individuals aren't always eating lobster or dining at high-end restaurants. In fact, many prioritize eating healthy at home by purchasing fresh produce and raw foods. By swapping out the $5 bag of chips for an 82-cent bag of carrots, you can save money while also nourishing your body with nutritious, wholesome foods. Number 5. Gambling. Gambling can take various forms, from heading to a luxurious casino to buying a lottery ticket at the local corner store. There's something alluring about tossing a coin into a slot machine and watching as it spits out a pile of cash. But the truth is, winning big is not as simple as it sounds, and the odds are never in your favor. More often than not, people end up losing more than they initially bargained for. However, this is not to say that you should avoid casinos altogether. Instead, before you head out, take a step back and think about a few things. Firstly, can you realistically afford to gamble? Having money in the bank does not automatically give you permission to spend it all on a game of blackjack or roulette. Secondly, set a budget for yourself. Decide how much you are willing to spend and stick to it. For instance, you could set a limit of $20 and leave the moment you've spent it. This way, you won't end up broke and regretting your impulsive decisions. Number 6. Gadgets and devices. Are you constantly drawn to the latest and greatest technology because of the alluring benefits it offers? Perhaps you're enticed by a better camera, a thinner phone, or a larger screen size. And let's not forget the appeal of having something brand new, which is what others want too. But take a step back and consider this. How much of a difference is there really between your current phone and the latest one on the market? Even if you have the financial means to purchase a new device, it doesn't necessarily mean that you should. It's important to carefully compare the features and specifications before making a decision. While some consumers may justify an upgrade for improved specifications, experts caution that the differences between old and new may be minor and the cost of upgrading may not be worth it. We often purchase more devices than we actually need, such as expensive toothbrushes, back massagers, smart alarm clocks, and sound systems that, while cool, are not essential. So next time you're tempted to buy the next gadget you see, think twice. Chances are you don't really need it. Number 7. Credit card debt. Credit cards have their benefits. With many providers offering rewards programs like cashback and free flights, using a credit card can be a smart way to spend money. That is, as long as you pay your entire bill each month and avoid carrying a balance. If you do carry a balance, the interest rate can be brutal, around 20% to be exact. For every dollar you owe, you'll be hit with an extra 20 cents in interest charges each month. So if you've got a $1,000 balance on your card, that's an additional $200 in interest. The bottom line? Don't carry a credit card balance or any other type of loan or financial obligation that accrues interest, for that matter, unless it's absolutely necessary. Always make sure the potential gains outweigh the interest charges before taking on debt. Number 8. Drinking at bars. Looking to save some cash? It might be time to reconsider your bar tab. Every year, people spend hundreds of dollars at pubs and bars, shelling out up to $10 for a single bottle of beer. But did you know that a 6-pack of quality brew from a grocery store can cost as little as $10? That's at least 3 times cheaper than buying from bars. While bars are popular for socializing, there are plenty of other places to meet new people and have fun without breaking the bank. So why not host a house party instead and keep the good times rolling without draining your wallet? Don't leave just yet. Before you go, make sure to smash that like button if you enjoyed this video and subscribe to our channel for more exciting content. We appreciate your support and can't wait to see you in the next one.